Okay. All right. All right. Any question, guys? Any question from what you studied so far from the link I sent on the group? Sam, Maureen, are you guys here? Are you guys here with me? Any question? Type it on the chat.
Yes, yes, we are here.
Okay. Any question? Any question? Yes or no? Yes or no? Sam said no, he has not read through. He has not read through. No problem. You still have time to read and probably ask question in our other in our next session. Okay. Madam Warren, do you have any question? Did you read through? Did you read? Do you have any question? Like anything you want to understand?
I read, but I didn't finish it.
Okay. Okay. From what you read so far, any question?
Not really, no.
Okay. Okay. Good. Okay. Good. So basically, we'll just all right. We'll go straight right into it. Now, what is Forex? What is Forex? What is Forex trading? Okay. Please, and you can mute yourself. You can mute yourself. All right. So let's use the internet. What's Forex trading? Let's use the internet. Let's ask Google what is Forex. What is Forex trading? Let's see what Google will tell us. What is Forex trading? All right. Okay. Investopedia. Okay. Let me see what this has for us. What is Forex trading? Blah blah blah. Not like this. Okay, let me go back. I think I saw something here just now. Okay. Okay, Forex exchange market is a global decentralized or over-the-counter market for the trading of currencies. All right. The market determines foreign exchange rates for every currency. It includes all spread of buying, selling, and exchanging of currency at current or determined price. All right. So now, what is forex trading? The layman understanding, right? Forex trading is just basically exchanging one currency for another currency. Do you understand? For instance, you have the dollar, right? You have the dollar in your hand, and you are in Nigeria and you want to spend money. All right. So what would you do? You take your dollar and then you go to a bureau de change and you change it and they give you naira. That is forex trading. You have just exchanged dollar for naira. And vice versa, you can also exchange naira for dollar. All right. Whenever you exchange currency, it's called forex trading. All right, which is also foreign exchange. All right, you are exchanging a foreign currency for another currency. Okay, so that's the basic layman understanding about forex trading. Okay, guys. So when you hear forex trading, most times it gets complicated. Like it sounds somehow to your hearing that forex trading is a big word, is a big word. No, it's really not a big deal. All right. So what we'll do basically is that we go into the market. All right. Now we buy one currency and sell the other currency. All right, to make money. Do you understand? So for instance, now let me use the naira and the dollar as an example again. Okay. So now you have the naira, and then you are probably speculating that the value for naira against dollar will go high. Value for naira against dollar will go high. So then you will change your naira into dollar. All right. Currently now in dollar. All right. Currently now in Nigeria, dollar is 1,000 naira. Okay. So you take your naira and you buy dollar at 1,000 naira and hope that dollar would go up to about, let's say, 1,500. Okay. You hope that you get to 1,500 and then you sell off and make profits. That is the simple term of forex. That is basically what we do. That's basically what we do. We buy one currency and sell the other, and then we sell the other and buy the other currency. All right. So if you have your naira, you change it to dollar. For you to now make profit, you will not need to change that dollar back to naira and make profit. For instance, you change 1 million naira worth of dollar, it gives you $1,000 currently, and the dollar goes up to like 1,500 naira 1,500 naira per dollar. You change your $1,000, it gives you 1.5 million. Now at that point, you made about 500,000 naira profit. All right, cool. That is just the game. That is just the game. But here, what we do is that everything is automated. Do you understand? Everything is automated here on platforms. So now, as forex traders, we have platforms that we use that give us this opportunity for us to, carry out trades like seamlessly. Instead of you taking your naira and rushing to a bureau de change to change it, and you take transport fare, you go to one place and exchange your naira to euro or pounds, your euro to pounds and all that. Now we have a platform we use to do all these transactions automatically at a simple click. All right. When you notice that probably the pounds is going to gain value against the euro, what is doing that you buy pounds at the expense of your euro, right? You buy pounds at the expense of your euro, and then if it goes in your direction, you've made profit. But if it goes against you, you've made a loss. All right. Are we together, guys? Are we together?
Yes, we are.
Okay.
Yes.
Good. So
Yes, we are.
all right, good. That's just what it is about forex trading. That's what it is. Okay. So with this platform we are using, it's what we use in carrying out those trades swiftly. All right. So we have some terminologies about on forex trading. Okay. We have some terminologies on forex trading that was dropped in the group. If you have gone through the link I sent earlier, you would have been able to understood some of these terminologies used in forex trading. Okay. You have now in forex trading we have buy and sell. If you have a notebook, you can write. Okay. There's something called buy and sell. Let me see if I can use my whiteboard. Okay. So we have buy and sell. All right. So buy. We have buy. Now in forex, buy can also be called going long. Some people will say, okay, I want to buy or I want to go long. All right, you understand? So if you have your book, you can write these things down. Buy. We buy in the market. Whenever you are buying, in the platform, you see where they write buy, you see where they write sell. In some other places, you see for the sell, sometimes it's called short. All right? Are we together?
Yes, we are.
Okay. So whenever you hear someone say, I'm going short, it means that what person is trying to tell you that I'm going to sell. When you hear buy, it means that the person is telling you, I want to go long. Or when person say long, it means I want to go buy. All right. So these are terminologies. All right. So from the blank explanation I explained about forex trading, do we now understand the concept behind forex trading? First of all, let me know, do we not understand the concept behind forex trading? So this is for Sam and Maureen. Do you understand the concept behind forex trading?
Yes, I understand.
Okay. So when someone say, I trade forex, so you basically know what the person is talking about, right? You basically know what the person
Sure.
the person is talking about. I buy this currency, it gives you that currency. That is what I do. You understand? So they are professional forex traders, all right? And they are also normal local trader, which is these are booking you see on the road, changing dollar to naira, all that. They are carrying that. They're carrying out FX. They are carrying out forex trading, all right? They are trading currency. Whenever you are trading currency, it means that you are doing FX. Do you understand? So that is that. What else? Okay, let me see what I can also find from that. From that stuff. I don't want to touch everything because I want you guys to do your own research and come back with questions for me, okay? Now, here we have PIP, P-I, okay? PIP, all right? Now, what does PIP mean? What does PIP mean? Can anybody tell me? What does PIP mean? If you studied PIP, it means point in percentage, all right? Point in percentage, all right? So that's PIP, point in percentage. The price, what we trade with price movement, all right? Price movement. Show you something. Let me show you something. Let me stop sharing this. Let me share my screen. Let me share my screen. And I know most times it gets confusing when people see things like this chart. Don't let it scare you. Don't let it scare you, all right? Which chart should I use now? Don't let it scare you, okay? Wow. Which chart do I use? Which chart do I use? Which chart is free? Okay, I believe this is free, all right? So when people see this, they get scared. You see all these things. Now, these things you are seeing here are called candlestick. I'm just going scattered in the sand, but I want you guys to just go straight. Like, we don't have time. I want you guys to be fast about this training. That's why you need to do your own studies. Go to YouTube, study, check those things. All right, and then come back with questions. I like answering questions, okay? And then we'll move fast on our classes so that we won't be lagging behind. And also, if I'm too fast, you can always reach out to me in my DM, meet me personally, and I can also break these things down for you to understand properly. Okay, whenever people see this stuff like this, like it's really confusing. But bro, it's really simple. It's simple as ABCs. All right. So these things you are seeing here, each of them are called candlesticks. That's what we call it in forex trading. These bars, these big bars you are seeing, they are called candlesticks. All right. I zoomed in now so that you guys can see it. Okay. One of it like this is called candlestick. Is candlestick. All right. So when we zoom out like this, and then it looks like this, it gets confusing. All right. So you guys, it gets confusing. I say, wow, I don't understand these things. So, but all these are one candlesticks merged together. All right. Many candlesticks put together. Each of them is called candlestick. All right. And each of them also represent price movement. Okay. Each of them represent price movement. You present price movement. You see, let me go to 1 minute chart so that you will see that this thing is moving. You see it's moving. Just hold on. All right. Each of them represents movement of price. Movement of price. Now, this thing you are seeing here is the euro against the Japanese yen. All right. So we trade different all currency you can think about in this world. We trade them in the forex market. For every country, currency is being traded here, but on the platforms that we use in trading, it is being abbreviated. All right. I will bring out the abbreviation and send it to the group that you guys can understand. Whenever you see euro, it means when we're talking about euro. All right. When you see USD, of course, everyone is familiar with that. We're talking about US dollar. All right. When you see GBP, we're talking about the Great British Pound. And when you see JPY, we're talking about the Japanese yen. All right. Talking about the Japanese yen. Now, this thing you are seeing here is currently moving. All right. So this is the price of the euro against the Japanese yen, which is the euro JPY. All right. It's only called quote currency and base. All right. You guys go and do your research on that. Quote currency and base currency. All right. Whenever you see questions like you see euro slash JPY, one of them is the quote and one of them is the base currency. So do your research and get back to me. That's an assignment for you. Tell me which of the currency is the base currency or the quote currency. For instance, you see something like this. Let me see if I can write here. Let me see if I can write here. Okay, see something like this. EU, or let me see GBP slash USD. Right? Something like this. Okay, so now I want you guys to tell me which of these is the quote currency and which of this is the base currency. That's an assignment for you. GBP slash USD. Go online and do your research and get back to me on that. Whoever get back to me on this, first of all, will get an airtime for me in the group. All right, I will do that person an airtime tomorrow. It's up. All right, let's start from there. Let's start from there. Go and do your research. Go and do your research and get back to me. Which of these is the base currency and which of these is the quote currency? This GBP now means Great British Pounds and the USD means United States dollars. Okay, so we are moving on. We're moving on. So these things you are seeing here are called candlesticks, and they represent the movement of price. Now, price moves in points. Price moves in points. Now, for every 10 points, we call it a pip. Every 10-point movement is called a pip. All right. Price moving point. Like for if you can see now, it's moving. You see this candlestick is moving. Are you seeing it? It's going up and down, going up and down. All right. It's moving. Whenever it moves in a point. 1 point movement. All right. It goes 1 point movement, 1 point movement. 1 point movement like this. It goes like this, like this. But I'm just trying to use a big illustration, but the candle does not move as fast as this. So it moves like this, it moves like this, it moves like this. So for every of these movements is called a point. So whenever you see people say, I just made 10 pips, it means that they just made 100 points. It means that they just made 100 points. All right. So 100, what's it called? 10 points amounts to 1 pip. Okay. Mean that you just make 10 points. Okay. I hope I'm not wrong. You see 100 points. Okay. 100 points. Okay. You say what? Are we together? Okay. So
Yes, we are.
okay, good. So price move in points, all right, and price move in pip. The movement of price is called pip. Whenever you get the word pip, whenever you say, the market moved 10 pips, 100 pips, 200 pips, it's telling you how far the market went. How far the market went. So we calculate the movement of market in pips. For instance, if you are driving, you say, I moved about 2 kilometers. All right, you say, it's far. Someone will say, I went up to about 4 kilometers. You say, it's far. So also, if price move, we call it pips. All right, we calculate it in pips. The movement of price, we calculate it in pips. All right, so we don't say, price moved about 4 kilometer distance. We know. We say price moved 10 pips, 20 pips, 100 pips, and all that. There are ways to calculate these pips. We will get there. All right, we will get there. There are ways to calculate pip. Okay. So another terminology I want to talk about here, we'll talk about candlestick, right? We'll talk about candlestick. We'll talk about pip. We'll talk about buy and sell. Okay. Now let's talk about stop loss. Okay. We're running out of time already, but let's go. Let's see how fast you can run. Okay. Now stop loss. What is stop loss? Now stop loss is for instance, you enter a trade, all right, and then you are hoping that the trade buys, and then for some reason whatsoever, it starts coming against you. All right. Now, what do? Instead of you to take the whole of your money in your account, you will now put a level. You will now put a level like this and say, you see this point here, you see this point right there. So no matter what, if price keeps coming down, I want price to go up, but for some reason, price starts coming down and gets to this line. Please close the trade for me and take whatever losses I have made. All right, that is stop loss. All right, you are stopping the loss at a particular place. You don't want it to get beyond that place. That's stop loss. It is very important in trading. All right, so I'm running fast. Let's see. Now let's talk about it. Let's talk about take profit. Are you guys writing? Let's talk about take profit also. Now you're entering the trade for me. You're hoping to buy, and you're hoping for the price to go up to this place, and then you say, you will not set a line here. You set a line here and say, this is my take profit. Okay. Now, if price gets to this place, I don't care. Just take my money for me. Even if I'm not in my system, I'm not in my computer, so that point in time, take my money for me and keep for me. All right. Because sometimes price might get to this place, pass it, and then start coming back. If you don't close it at this point, if you don't close it, your money and the money you've made has gone. It will now come back and hit you out on stop loss. Okay. So that take profit and stop loss is very important. You determine how much you are going to lose by setting a stop loss before you enter the trade. So it's not as if you are going to lose all your money in the forex trading at one trade. No. If you always set your stop loss and your take profit, you won't be able to lose all your money at a go. All right. So stop loss helps you to reduce the loss you make in a particular trade, and take profit helps you to maximize your profit by closing out your profit for you, even if you are not there to monitor the trade, because you won't always be there 24/7, all right, to monitor your trade. So that is that on it. Okay. Okay, let me talk about lot size quickly. I'm just trying to rush, but you guys can do your research on this as I'm explaining, okay, to get a better understanding, or also ask me questions in the group, and I will explain again what it means. I'll also give you guys materials for you to be able to understand what these terminologies mean. These are terminology people use, and then you look at Forex like a big deal. It's really not a big deal. You don't really need to know everything to make money in Forex. You understand? You continue learning. All right, the learning is a continuous process. As you go, you start making money, and then the more you know, the more money you make in the forex market. Okay. Now let's talk about lot size. Lot size. Now, what is lot size? All right. Now, lot size comes like this in the market. Let me write. Okay. Lot size comes like you see 0.1, which is the mini lot size. Okay. 0.1. All right. And then you see another one. 0.01. And then we also have one. Right. We also have one. Okay. So I'm using this as an example. We have different numbers you can use that lot size, but 0.01 is the minimum lot size in forex trading. But on other platforms, you can see 0.001, blah blah blah, just like that. Or let's say derive via X trading. Okay. So now 0.01 is the minimum lot size you can use in forex trading. Okay. Now, for somebody who is using 0.01 lot size, will probably take a trade. All right. The amount of money that person will make will be far lower than the amount of money this guy will make here. All right. And also be far lower than the amount of money this guy will make. Do you understand? So, for instance, you use this 0.01 to take a trade, and the trade moves in your favor. Let's say it moves 10 pips. What you'll be making with this thing you are seeing here is, let's say, 10 cents. I'm not mistaken. You're making 10 cents. Then this guy here will make $1. Right? This guy here will make no. Hope I'm not mistaken, Mr. Val. Are you still here? Yeah.
You are in order.
Okay. So the guy who using this will use
one lot size gives you 1 pip, $1.
Okay,
the
fine.
Full lot size is 1 pip, $1.
Okay, yeah, fine. So this guy here, if price move about 10 pips, this guy here will make 10 cents, and this guy will make $1, and then this guy will make $10. All right. So that's the concept about lot sizing. Lot size is very important. It depends on the amount of money you have in your account and the amount of money you are willing to risk. So that will determine the lot size you use to enter the trade. Lot size simply means, in a layman explanation, it means that you are taking a portion from your money and say, now this money, now I want risk. You are taking a portion. Let's say you have $100. Then you want to calculate that, for this my trade now, I want to risk just $1. Just $1. Now you've already know your stop loss. Now you are looking for the lot size to use for you to be able to lose that particular $1. If your lot size in coming place, you now calculate it and say, this is the lot size I will use. I don't have much money. But someone who has about, let's say, $10,000 account will be using this. You that have $100 account, you'll be using this because you can't use this. Because if you use this, if price just moves small against you, bro, your money is gone. Your money is gone. But the guy who uses this, if your money moves against you with your small $100, you are still in the game. You can still withstand the movement of price. You can still withstand it to get your take profit, and then you make your little money. You're out of the market. Okay. So lot sizing depends on your account size. All right. Lot size can change as your account balance grows. Your lot size can change. All right. But your stop loss and your take profit should always be determined before you trade. Remember, if you are buying, now write this down. If you are buying, your stop loss should be below and your take profit will be above. And then if you are selling, your stop loss will be above and your take profit will be below. Do you understand? Are we together? Write that down. Write that down. Probably in the next class I will explain better.
Please take it again.
Please say it again.
Okay. If you are buying, your stop loss will be below and your take profit will be above. If you are selling, your stop loss will be above and your take profit will be below. Write that down. Our session is ending right now. And then, guys, thank you for hopping on this call. Probably tomorrow we might do a session to like cover up on this thing so that you guys can, flow very fast, and then we'll take it off from there. Tonight, this guy study. Go to YouTube, search. Go to that link I said. Read through, right? And come back with questions because I won't touch everything in these our classes because I won't touch everything. So, guys, you need to help yourself by studying